In a pricing document seen by Bloomberg News, Bank of America is going to charge about asset managers as much as $80,000 a user per year for its research division's full package of services when the European ban goes into effect, much higher than JP Morgan and UBS. Well, Bloomberg sat down for an exclusive interview with Brian Moynihan, Bank of America CEO. He said he's confident that clients are going to pay out.
I'm sure that people will pay us for that.
Are they going to pay $80,000 a year?
I assume they will, because that's how they're going to have to get it. So the problem is, I think with our customers and clients that do tens of millions of dollars of volume with this stuff, this kind of, to me, it's not been the biggest issue I've been worried about.
Well, joining us from London with more is Katie Linsell of Bloomberg News. We heard something similar from Morgan Stanley. They said, look, we're huge when it comes to equity markets, so they're going to pay for our research too. We'll just get more business. Are they emerging the winners of this debate?
I think it's really too early to say who's emerging as the winners. There's quite a lot still to be done before January when MiFID II comes in, and still some room for maneuver from all the different banks to come out and say what their final levels are. But it's really very much an interest of all these bank CEOs to be saying, you know what, yes, they're going to pay for it because that's the only way they're going to be getting it. So maybe there's a bit of a war of words going on at the moment. But what we do know is that investors are looking again at their research budgets. Everything is going back on the table, and it will be interesting to see over the next few months who does come out as the winners.
And I should point out that MiFID, among other things, and that what we're talking about is you're basically separating your research from other offerings. So there's more transparency to markets, there's more competition, at least that's the hope. But Katie, Steve Englander has been writing quite a bit about how this is going to put the smaller researchers out of biz. You're going to have not a lot of different or new ideas out, or bold ideas. Is that true? Is that what we're hearing from the independent guys?
Well, I wouldn't say that necessarily the size is what matters here. I would say that it's going to matter a lot if you have a proven track record as an independent firm. If you've been able to keep clients sort of rolling on year after year with your service, then maybe you can be pretty confident that going ahead, they're going to stick around. But for new guys who are pitching business now, they're probably going to have a difficult job convincing investors to sign on. What will be interesting going forward is the second-tier banks, for example, in credit, who maybe don't have huge credit businesses, they don't have the best credit analysts or strategists on the street. It's going to be tough to see how investors are going to want to pay for that research. They were happy to receive it for free, but going ahead, they're likely to only pay the biggest and the best.